Dear shareholders, good afternoon and a very warm welcome to the 25th Annual General Meeting of Tejas Networks Limited. As a reminder for smooth conduct of the meeting, the shareholders will be in the mute mode. The audio and video will be enabled when they speak at the AGM as per the pre-registration.
The next speaker shareholder is Shri Tamal Kumar Majumder.
Sir, I have gone through the entire annual report, have some queries, and seek your indulgence. During the year, the company declared excellent results in comparison to last year, achieving several milestones like completing supply of 1 lakh cell sites to BSNL, signing multi-year contract with Vodafone Idea Limited, embarking strategic partnership with NEC Corporation, Japan, and many others. Looking at these positive developments, how our company is doing during the current Q1 of financial year 26 and your expectation for the remaining part of the year. Sir, as per page 219, there lies a balance of 4,315.16 crore under trade receivable, unbilled receivables, and contract assets as on 31st March 2025. Would you please share details in this aspect, disclosing conversion of unbilled receivables into billed receivables as on date, whether we fully recovered trade receivable from our customers? Sir, it is noted from financial year 25 TCS annual report in page 59 that total transaction with our company for financial year 25 with TCS was 7,517 crore. And the proposed transaction for financial year 26 of not exceeding 5,000 crore, and the proposal is being passed by the shareholders at the recent AGM held as a resolution for related party transactions. But as per page 285, our company showed revenue of rupees 7,329.46 crore from TCS during financial year 25. Would you please share the reason for such difference? Whether the proposed decreased transaction value of 5,000 crore during financial year 25 with TCS would have any negative impact on our revenue during financial year 26? And sir, what steps? We are depending hugely on our parent TCS. So what steps the management has taken for decreasing dependence on TCS for business? Whether we'll see such impact during our financial year 26. Sir, it is noted that the company entered into a... Oh, and another thing is that, sir, in your presentation also, both you and Mr. Rai mentioned regarding the PLI, you received PLI for first half of financial year 25. What about receivable of next part or next half year of 2000 financial year 2025? Whether we received that amount or how much we booked in our accounts as receivable from the government of India under PLI for the next 6 months of financial year 25. Sir, would you please share with us the total value of multi-year network equipment contract with Vodafone Idea Limited? How much of the contract will be attributable to financial year 26? Vodafone Idea Limited is in huge financial stress, and they already mentioned that non-availability or further financial help from the central government may force them to close down their business within a year. Looking at the bleak scenario, I want to know your view in respect of the said contract. Sir, it is noted from page 102 that in addition to the above, the company own multiple contracts from leading electric utilities in India and South Asian. Initial order from leading telecom operator in USA, as well as multi-million-dollar order from Malaysia. Would you please share details in this respect, disclosing total value of these orders as on date? And whether these are included in our order backlog of 1,019 crore as on 31st March 2025? Do you believe that implementation of global orders will increase our international revenue substantially during financial year 26 from 3% achieved during financial year 25. Sir, as per page 16, our company made an expenditure of 557 crore on R&D during financial year 25. Whereas, as per page 88, total expenditure shown under R&D as 645.92 crore. Revenue 252.32 crore. Capital 393.60 crore for financial year 25. Could you please clarify the difference? Sir, it is noted from page 15 that the company carried an inventory of 2,367 crore as on 31st March 2025. How much of it is being converted into finished product as on date? Sir, it is noted from page 181 that consolidated retained earnings balance as on 31st March 2025 increased by 169.23 crore due to extinguishment of merger liability. Would you please share details in respect of this extinguishment of merger liability? What type of liability was there? And what is the reason for its extinguishment? Sir, it is also noted from page 266 that company provided 127.81 crore under warranty during financial year 25. But utilization was a mere 0.84 crore. What is the reason for such huge provision? Whether our company expects any large claim from our clients or it is being kept to safeguard our interest? Please share your thoughts. And lastly, sir, I have noted from page 204 that the company had to pay interest of rupees 1.89 crore for delayed payment of advance tax. Though the amount is not very big, but it is not at all a good instance for a Tata group company. I hope that strict instructions will be given in this respect for avoidance of this type of interest in future. Thank you, Mr. Chairman, for allowing me to complete my speech. Thank you all for patient hearing.
Thank you, Tamaldaji. Mr. Tamal Kumar Majumder, I think you have asked several questions, and thank you very much for all your inputs. And I'll try and answer a number of questions that you have asked for. And in case if there is something that you need more clarifications, as I said, please do reach out to us. Trade receivables, it's largely on account of the large project that we are executing, and we expect to recover them fully as we see it now. Revenue difference between TCS annual report and Tejas annual report could be on account of certain discounts or certain provisions, something that we will also reconcile. PLI in the second half of FY25 is expected to be received during this year. Approximately 279 crore is what we expect, and that's something that has been accounted for or recognized in our accounts for the financial ending 31st March 2025. Inventory is expected to be converted significantly during this year because most of these are built and to specifications, and they are in the coming weeks and quarters. We hope to convert all of them to revenue. Warranty provision increase is due to higher value projects, especially on 4G, BSNL 4G project execution, and it is for the future warranty period. Okay. Advance tax delay, I think there is we take your inputs, and I think our team is working hard to ensure that we do not falter on that count. It's primarily due to the underestimated profitability in the beginning of the year, which I think we will normalize it going forward. Merger liability was on account of residual shareholding of Sankhya Labs prior to the merger. It got extinguished as a result of the merger during this year, and it's reversed to retained earnings. R&D expense difference between the two pages is 640 156 crore. R&D was spent, that includes capex, while R&D expense in the statement is mainly people-related spend, and I think that's the difference that you see between I think page 16 and the other one, right? So with this, I think we have answered most of the your questions, and in case we need, please do contact us, right? Once again, I want to thank you, Tamalda, for your insights.